This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Are you ready to trade the future of crypto today? Well, Leverage is a DEX, so you can trade with your keys and sign orders just with one click, and Leverage is fast. Yes, indeed, Leverage is powered by Gluon, a new layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. Yes, Leverage, the new exchange that combines the best features of CeFi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage while maintaining control of your assets at all times. It's like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io, and leverage is spelled Leverj.io, and trade the future of crypto today.
Yeah, boy!
My guest today is Tim McCourt. Tim is the CME Group's Global Head of Equity Index and Alternative Investment Products. And Tim is on the show because last month, the CME Group launched their much anticipated Ether Futures derivatives offering following the launch of their Bitcoin futures at the end of 2017. Hey, welcome to the show, Tim.
Great. Thanks for having me. Excited to be here today.
Awesome. Hey, well, to begin with, Tim, let's just learn a little bit about yourself. Do you want to just introduce yourself a little bit? What's your background and how did you end up at CME Group?
Sure. Thanks, Andy. So as you said, I'm Managing Director and Global Head of Equity Index and Alternative Investment Products at the CME Group. I've been with the CME almost 8 years. It'll be 8 years next April. It's been a great few years for me and the team, and I've really enjoyed moving into the exchange space. Prior to CME Group, my background was a equity index swap trader on the sell side, where I spent about 10 years at JP Morgan, 3 years at the Royal Bank of Scotland. So always kind of in the equity and index space, and that's what my team looks after at CME Group in terms of global equity index benchmarks on the S&P 500, the NASDAQ, the Dow, the Russell, the Nikkei. And then on the alternative side, we look after commodity indices, cryptocurrency, and we also recently introduced a water futures contract at the end of 2020. So lots of exciting products coming out of the team, and it's been a lot of fun launching Ether just a few weeks ago.
Yes, indeed. Well, look, let's talk a little bit about this Ether futures offering then. And I guess, most listeners will be reasonably aware of the futures market, but I think it'd be great just to hear you talk about this a little bit. So just before we dive into ETH futures, can you talk a little bit about what the futures market is and why futures offerings are an important part of global markets?
That's a great question. So I think when we look at it here in the US, CME Group is a regulated futures exchange, or a designated contract market as it's known, also referred to as a DCM. And we're the marketplace where buyers and sellers meet to transfer risk or access the market. And they do so through futures contracts or options on futures contracts at CME. And that futures contract is kind of what the name suggests. It's a contract between two counterparties to the transaction where they agree to a price at a future date and time for a specific commodity or underlying. And then they exchange that underlying at that expiration or maturity date. And the contracts could either be physically settled, where they could deliver a physical commodity, or they could be financially settled, where they move the US dollar value or price performance associated with the underlying. And what's interesting is in terms of how these contracts are used or what purpose they serve in the marketplace, it really serves a multitude of purposes for either managing risks or accessing the market or even investing. You could be an end user and need to hedge the price of raw materials or inputs. You could be a commercial grower looking to manage the forward price of where you might be able to harvest and then sell your crop. You could be on the financial side, you could be using foreign exchange or interest rate or equity index futures to manage aspects of your investment portfolio or to manage other exposures you might have in the related parts of the market, whether they be the cash or other types of derivatives such as options. So they really have a multitude of purposes for a multitude of users. And in the case of cryptocurrency, I think that's really what we've seen is the confluence of these benefits coming together to have a really unique offering at CME Group, where we can offer a regulated futures contract here in the US on a regulated venue that is centrally cleared by CME Clearing, where we guarantee that at the end of the contract, the buyers and sellers get the performance of that contract. And we do so in a way that offering access or risk management needs to something as new and exciting as cryptocurrency to folks. So when you really think about the combination of what we've done with futures products, with our nearly 180-year history at CME Group, and now availing that to the exciting space of cryptocurrency, it's a really exciting opportunity for us at the exchange and for our customers.
Well, so tell me how the CME Group's Ether futures works then. So, what's the underlying and where is the dollar value? How does that all work?
So when we look at the Ether futures, which we just launched back in February, it works mechanically the same as the Bitcoin future at CME Group, meaning that it's based on a underlying reference rate. In the case of Ether, it's the Ether US dollar reference rate, which is a once a day index that is published in terms of an observation price that is established between 3 p.m. and 4 p.m. London time by pulling Ether US dollar fiat transactions from various constituent exchanges. Those exchanges are currently Bitstamp, Itbit, Coinbase, Gemini, and Kraken. So on average represents about 50% of the Ether US dollar fiat trading that happens in the underlying spot or digital market. And then during that hour between 3 p.m. and 4 p.m. London time, that 1 hour window is partitioned into 12 equally weighted 5-minute windows where we take the average median of the spot transactions submitted in that 5-minute window and then straight line average them across the 12 samples for the hour. What that does is that provides the once a day observation of what the value of the value of Ether in US dollar is, but it's also done in a way that it's a regulated underlying reference rate. It's a regulated benchmark under BMR out of Europe. And it's designed to be resistant to manipulation, but to closely tie to the spot market. So the futures contract financially settles against the Ether US dollar reference rate at expiration, which is the last Friday of the month. And we currently offer 8 contracts, the 6 nearest monthly contracts, and then the following or the 2 nearest December contracts. So a little bit longer dated, where right now you could trade December 2022 Ether and Bitcoin futures, for example. So that's kind of mechanically how they work, how the reference rate works. And it's worked really well on Bitcoin futures the last 3 years and going pretty well the first few weeks of trading here for Ether.
Yeah, very good, Tim. So, one of the great things about futures contracts, of course, is that it does open up the door to, I guess, institutional players in the market. And also you talked about, one of the key roles of futures contracts is giving market participants the opportunity to hedge their positions. And you use the example of a farmer or a grower can kind of, hedge their positions against, extreme weather events and things like that. And in the case of Bitcoin, the example often used is that, Bitcoin miners can hedge their positions without necessarily having to actually sell but their actual Bitcoin if they don't want to. But so I'd love to, just talk through a couple of specific use cases that you see being used at the moment by market participants in terms of the Ether futures?
Yeah, that's a great question. And I would say in large part, the underlying thesis and the use cases we're seeing so far do marry or are congruent with those that we find in Bitcoin. Even though the nuances are a little bit different, where you look at some of the miners using Bitcoin futures to hedge where they may be able to mine the assets down the road and lock in and manage some of the costs associated with that. You also have folks who are staking Ether and accumulating Ether positions, or have an Ether position such that they could be part of the validation effort in terms of the movement of proof of stake. So there's lots of things that they have a need to manage some of the price undulations around the underlying asset, but they don't want to offlay or sell or liquidate the asset itself. And futures are a great way to manage that risk, but maintain that underlying core digital holding in your portfolio or in your account. It protects you from some of the price movements if you're long and you sell futures, for example, or if you have other investments in the marketplace, you can use futures as a way to counterbalance some potential swings in price without having to liquidate the asset. And that's a really enormous benefit of the futures market. When we look at some of the other use cases, I think what makes Ether interesting as well as there are some differences around the asset itself or the underlying network and interest in Ethereum technology or the Ethereum network. And what I mean by that is think about some of the news we're seeing in the media with corporations accepting Bitcoin as payment, or there's over 200 plus DeFi projects in the works currently on the Ethereum network that are using Ether as the fuel. And what that does is that gives a rise to a real need to manage some of the assets and liabilities on the balance sheet, if you think of it like that. If you are accepting or utilizing a digital asset in a transactional capacity, but you are still plugged into the fiat-based economy, you have a need to manage the risk as you transpose the assets or the value from the digital asset to fiat, to engage with customers, to pay vendors, to pay employees, to make investments, acquire things. You know, when you think about it, it's really, it's not too dissimilar from other traditional use cases for businesses managing various other exposures they have just as a function of conducting business. I think the other thing, though, that I would say when we look at use cases, it's really been intriguing to watch the continued institutional adoption of cryptocurrency, where on top of those more crypto native use cases about mining or staking or figuring out how to hedge yourself on a transactional capacity of crypto versus fiat, you now have a plethora of market participants who are looking at allocating and investing in cryptocurrency, or deploying trading strategies that they've done in traditional asset classes, where they may be looking to arbitrage the various crypto related products in the marketplace, whether it be futures versus the underlying digital asset, or futures versus some of the other investment products that are out there, or some of the unit investment trusts that are set up. There's premium extraction, there's arbitrage, there's a SEC lending market that's developing around Bitcoin, where people are using our options and futures to hedge that. So there's lots of adaptations of traditional financial use cases on top of the more, what would be kind of the natural commercial hedger in other parlance in terms of futures of the commercial grower or end user. But the advent of more and more traditional financial applications, but being applied to crypto, is something that we've seen over the last few months really accelerate. And I think that's going to be an exciting trend to continue to watch.
Yeah, I tend to agree, Tim. I'm curious as to, when CME Group, you begin to look at Ethereum, and you've got this history with Bitcoin futures, and then presumably the reason that you've gone with Ethereum is, I guess at first glance you would say simply because ETH is the second largest cryptocurrency by market capitalization after Bitcoin, so it makes sense. But there is, I don't know if it's concern, perhaps it is concern, within the blockchain ecosystem, if you like, that look, gas fees, for example, are really high on Ethereum when there's too many users trying to make different transactions, and all the DeFi stuff that's happening, all the NFT stuff that is happening just puts a big load on the system. Do you take those kind of factors into account when you're launching this, or are you sort of more more agnostic and you're just looking at it from a purely, just this is what people want to trade and it's the second largest asset, so that's what we're going to do?
Now, when we go down the product development route at CME Group, a central tenet that we adhere to is customer validation. We're constantly engaged with customers to understand what they want from the CME Group. What can we introduce that is additive to their risk management efforts or their ability to access the market? And they're really a great source of inspiration for us in terms of the design and development of products in new markets. And Ether and Bitcoin, no exception on that front. So I think when we look at Ether, this is something that we've engaged with customers almost immediately after announcing Bitcoin futures. Ether has been the long second most popular product choice after Bitcoin for those customers at CME. And it's been kind of number one on the list in terms of our development for a while now based on customer feedback. We introduced the reference rate in May of 2018. And that was the first step to availing some transparency and a centralized price on that daily observation rate of what the value of Ether is in US dollar. And from there, the demand has just continued to grow from customers that they wanted us to introduce the products. I think now it's hard to guess as to what all the motivations of customers are in terms of why this was at top of their list. But I do think it's certainly Ether being the second largest cryptocurrency by market capitalization and average daily trading volume lends a lot of credence to that, why it's so in demand with customers. I think you also look at interest in the DeFi projects, the Ethereum network, kind of as you were saying, Andy, like there's lots of things that make and has unique interest presented on Ether and Ethereum projects in the marketplace. But some of the underlying nuances you talk about in terms of the personality traits, for lack of better expression, on Ether, those are certainly things that might motivate customers. But when we're looking that our contract is financially settled and based on spot transactions, Ether versus US dollar are in the constituent exchanges, some of that is a little bit more interesting for those in the weed or those in the weeds looking at the projects, maybe if they're validating Ether, if they're trying to get a DeFi project up and running and things of that nature. It's important for us to be aware of some of these, but it's not necessarily a main driver of our product design process. I think some of the feedback we've gotten is that when you look at a financially settled product that provides access to the underlying instrument, in this case, Ether, without having to hold the digital asset, that's also a benefit and can avoid some of the issues you were talking about, or potentially some of the things what may be perceived or identified as strains on the network, because these are ways for people to get exposure to crypto. They can make that foray into investing or trading cryptocurrency, but they don't need to handle the underlying asset or understand all the exact nuances and intricacies of the network and some of the pricing dynamics you outlined. What's interesting over time, I think some of the things you brought up around Ether are not too dissimilar from things we heard about insurance, right? When we first launched Bitcoin futures, and there was these new costs associated with managing and access cryptocurrency. And over time, what we see is those things get priced into the futures theoretical pricing model. And as there are different risks and different characteristics in the underlying market, people account for those in the futures market, in the options market. So that'll be something we look to as we develop a term structure in Ether over those 8 futures contracts that we offer. Do we see anything presented that's uniquely interesting in term structure, that people may be valuing some of these nuances differently or assigning different value or different risk to some of these parameters over time? I think that's where we can look to the futures market and the forward term structure that can have high informational value that could be of benefit to the marketplace when they're looking at some of these issues. But again, not necessarily a critical feature that we discuss as product design, because our contract is just financially settled.
Yeah, fascinating, Tim. I think that about sums it up. Very, very nice. Now, there's also there's this meme or narrative, if you like, that the launch of your Bitcoin futures offering in December 2017 effectively marked the top or near the top of the Bitcoin price, and then it crashed from there and went into the bear market in 2018. I don't think this narrative is true necessarily, but I'm sure you've heard this meme, and I'd just be interested to hear your response to it.
Oh, that's great. I mean, I certainly have heard it. That's for sure. I think the marketplace love to point that out, and I think to your point, Andy, I feel like some folks tried to place the blame for the price action at the introduction or the advent of futures, but I really don't subscribe to that theory. When we look at the launch in 2017 and the futures market relative contribution to the price discovery process back then, we traded a little over 1,100 contracts that first day. The first few days we were around there, around the 1,000 contract mark per day. That's the equivalent of 5,000 Bitcoin, 5,500 Bitcoin back then. I really don't believe that slice of the pie at that time could move the entirety of the market in one way. So I really just don't ascribe that theory to the introduction of futures. I also always like to point out it's always interesting when folks like to point to that watershed of in December of 2017, but then give CME zero credit on the way back up. We've certainly surpassed that milestone with 11 to 12, sometimes 15x that volume we did the first week back in 2017, but yet there's no mention that CME has caused a upward price movement in where we now are often the leading center of price discovery in Bitcoin. So I think it's just a dichotomy that exists. People like to point out the top tick in 2017. Futures have come a long way since then in terms of their robustness. CME, the last several months, has often been the #1 futures exchange by open interest. And the price has moved up to 50,000 with futures being in the marketplace. So the institutional adoption that we facilitate at CME Group is certainly heralded as a great accomplishment. I think the last few months and quarters, that's always been a central part of our hypothesis for why we're introducing these futures. So we've always believed in it. I think now the market believes in it, but it is always interesting when people still like to bring that up. And I will say anecdotally, I'm certainly glad it didn't happen on Ether, because having to try and dispel that notion for another 3 years on Ether would have been a challenge for sure, considering we don't really find it grounded in fact.
Yeah, that's exactly right. Hey, look, I'm not a trader myself, Tim, but do you have thoughts on there's these different ideas as to whether the futures market leads the spot market, or it's the other way around, or there's a different relationship altogether. And I think obviously the real story is that market dynamics are complex and shifting, and it changes all the time. But do you have thoughts on that?
It's a good question. I would say I think there's a general comment, and then if we kind of specifically drill down on cryptocurrency, I think in general when we look at some other markets, for example, like I said, my team looks after equity indices. Futures are certainly the leader of price discovery. We're the most liquid risk pool, liquidity pool on the major equity indexes across the globe. So I think it depends a little bit market to market. You can always see that derivatives market can grow to a more contributing factor than the underlying spot market, where on the index side for equities, for example, we outtrade the cash market 1.5 times per day. When we look at the ETF markets, we often outtrade them 10x or 11x per day. So it's really hard to say what exactly drives that. Is that replicable? But I think when we look at cryptocurrency early on into Ether, a little too hard to tell. When we look at Bitcoin, saying certainly the feedback we've gotten from customers is that futures are a leading price discovery tool in the marketplace. And then when we look at some of the things in crypto, it's hard to say that's always the case because, for example, the spot market's open on the weekend. The CME futures market is not. People love to talk about the CME gap. So there's different market structure in crypto, and I think it ebbs and flows. But I think if you look at the volumes, if you look at the open interest, if you look at the large open interest holders and large traders that we're bringing to our market, certainly CME is a leading center of price discovery for Bitcoin. I think oftentimes it is the leading center of price discovery, especially when you see things like liquidations or kind of auto liquidations happening on some of the unregulated platforms overseas. We see spikes in volume at CME that correspond with that. So while they're interrelated, I think CME is in a prominent position for the price discovery of Bitcoin, and we're working hard to also achieve that for Ether.
Yeah, that makes sense, Tim. And look, you mentioned the CME gap, right? And that is a function that happens because, as you mentioned, the cryptocurrency markets are open 24/7 all around the world across all jurisdictions, whereas the traditional financial products, including CME Group, you're sort of operating on not traditional Monday to Friday, 9 to 5, or whatever it is. Is there a case to be made for that to change as everything sort of goes digital and global and 24/7? Where do you see that heading?
Yeah, it's an interesting question. I think when we engage with customers, that's certainly something that they bring up. People do love to talk about, the CME gap on crypto Twitter. It's always great to see the dialogue and the discourse. As a side note, one of the things I love when people talk about the CME gap is, a lot of times people are pointing it out. Some people think it's a pro, some people think it's a con in terms of the market structure or the price discovery process. But what's really exciting to watch is all of these traders and crypto enthusiasts are really talking about a futures fundamental technical analysis when they're looking at price gaps. So to see that develop in the cryptocurrency ecosystem, just as someone who's been in the futures markets for over 2 decades, that's really exciting to watch that kind of transposition or transference of technicals to crypto, even though I'm not sure everyone realizes exactly what they're doing when they look at some of that analysis. But that's a great futures fundamental technique now presenting itself in crypto, which is exciting to see. When we look at the trading hours and things like that, cryptocurrency is that one anomaly where usually the futures markets at CME and at other exchanges in the futures industry are open and available more broadly than the underlying market, but crypto never sleeps. It's open 24/7. So folks are engaging with us, seeing if we can do things. But since crypto is one product set that we trade at CME with over thousands of futures contracts across the other 6 major investable asset classes and all of the futures and options on futures products we do need that downtime for our systems in terms of it's how we do system releases, it's how we do product launches. We have a lot of technology work that needs to be deployed over the weekend. So we do need that 1 hour maintenance window and kind of being closed from Friday night to Sunday afternoon. So it's something that's necessary because of the totality of what CME provides to the marketplace, but it's always an interesting question. We engage with customers, particularly because we point out things which people don't necessarily know, is that Globex is not available, but you can still transact block trades at CME over the weekend. You can still do EFPs or exchange for physicals against the underlying digital asset. So there are ways to trade and submit trades for clearing to CME over the weekend. It's just that the central limit order book is down for maintenance.
Yeah, that makes sense, Tim. Well, I'd be interested. I suppose again, it's a popular meme in crypto that the institutional wall of money is coming, and this has been a story that we've told each other since 2017, if not before. But of course, the story is beginning to play out, and so we have actually seen, corporate companies such as Square and Tesla and MicroStrategy begin to put Bitcoin on their balance sheet, in their treasury, which is, amazing to see this happen over the last month or two. So, you would probably have more insight than most in terms of just, what kind of interest you're seeing from really traditional institutional players that want to trade these assets. And now you've made not just Bitcoin, but Ether futures offerings available. So I guess, talk to me about what sort of interest you see, what sort of volumes you're seeing, and how you see this playing out. Just any thoughts you have on that.
Yeah, it's certainly the institutional adoption of cryptocurrency is accelerating. It's been, as I said, a central part of our product design and product strategy. We do think it's been here for a while. It started to manifest shortly after the introduction of futures back in 2017, but it's really accelerated, Andy, with some of the comments you've made with respect to announcements by corporations, announcements by asset managers and hedge funds. There's certainly, you can't ignore the upwelling of interest and demand that we're seeing covered in the media. I think what's interesting though is when we really understand why is that happening. I think it's because the way we like to talk about it at CME is back in 2017, a lot of the conversations we were having with customers was more around what is cryptocurrency? What is Bitcoin? Is this right for me? Is this not right for my investors, etc.? As people have gotten more comfortable and with cryptocurrency, as they see some of the returns that it generates, the uncorrelated risk it can add to your portfolio, the question has evolved now into not what is Bitcoin or what is Ether, but how much should I allocate to Bitcoin? How much should of my portfolio be invested in cryptocurrency? So we're talking about tactical allocation questions. We're talking about understanding the need for hedging commercial transactions that may be denominated or take place enabled by cryptocurrency. So these are very evolved questions to where we started in December of 2017. And it's no surprise that we've seen volume increase, where January of 2021 was our best month since launching Bitcoin futures, where we did just about 17,500 Bitcoin futures per day in January, which is a little under 90,000 Bitcoin equivalent. And if we look at year to date through end of February 2021, we're averaging just about 15,500 futures contract for the year per day. To put that in perspective, that's up 76% versus 2019 full year. And that's up almost 145% year over year versus the first 2 months of 2020. That's phenomenal growth that we're seeing. And it's not just trading volume, it's open interest. Q4 of 2020 saw our highest average daily open interest, which was, the number of futures contracts being held overnight. And that was almost 11,500 average daily open interest, representing, between 55 to 56,000 equivalent Bitcoin. And that was a record. In Q4, we also had a record 110 large open interest holders, which are those traders that hold at least 25 or more Bitcoin futures worth at least 125 Bitcoin equivalent. And that was on average 97 large traders for the quarter in Q4. And right now we're still hovering, in the 90s in terms of average large open interest holders in 2021. So the fact that you have volume growth, large trader and large open interest holder growth, open interest growth, these are all great things that are really the byproduct of more and more institutions coming to CME to access the cryptocurrency market, to trade the cryptocurrency market, or to hedge some of their other crypto holdings that they may have amassed if they are active in the underlying digital markets.
Yeah, really impressive metrics there, Tim. Great to see. Just, I guess, probably one of the last questions. It's a little bit of perhaps more of an esoteric question, if you like. But do people such as yourself or you guys at CME Group and the like, do you ever consider the long-term implications of, I guess, open-ended, open source, decentralized protocols such as a Bitcoin and Ethereum, and their potential and capacity to not so much undermine, if you like, but eventually replace the likes of the legacy financial system and come up with a new model or a new system altogether? Is that something that is exciting or interesting or scary, or you don't think of it like that?
When we look at cryptocurrency, it's certainly been very interesting and exciting to see how it's pushed out the frontier of finance. I think it's a great example of not only innovative technology, but also how innovative technology can be used to further extend that frontier in traditional financial markets. When we look at CME Group, like I said earlier, we're nearly a 2-century-old institution with a long storied, innovative history. When you think about how CME got its roots, we started as a butter and eggs exchange on the streets of Chicago. and we introduced the first futures contract on corn. And that was, a very long time ago, almost 180 years. So we've come a long way with a long story of innovation. We introduced financial futures contracts in the 1970s with the FX market. We introduced equity index contracts on futures. We now introduced cryptocurrency in 2017. So CME is certainly the natural home for innovation in the financial markets, and we have a 2-century track record of doing so. So I think this is just the latest example in a long string of examples of how things and new technologies and new products come along, and we adapt and we innovate and we continue to serve the risk management needs for our customers and for the marketplace, and provide that access to the markets that people want and they need. So I think it's very exciting. I think it's interesting. I think it's going to be a lot of fun to see where it goes. Ether being our third cryptocurrency product, but our second asset behind Bitcoin futures and Bitcoin options. I'm really excited to see where it grows. It's had a great first few weeks of trading and adoption, and really exciting to work with our customers and the market to see where they need us to focus next, so we can continue to deliver the innovation they expect from the CME Group, such that they can manage their risk and access the market.
That's a great answer, Tim. I enjoyed that. All right, let's close this out. Look, any final thoughts? Tell people where they can go if they want to follow you on your various platforms, where they should go if they want to engage with CME Group and learn more about your futures offerings, and any hints you can perhaps share as to any new crypto asset products that you happen to have in the pipeline. The microphone is yours. Take us out.
Yeah, always a tough question to answer. Certainly Bitcoin and Ether will keep us busy for the foreseeable future on the crypto front at CME Group. So no product pipeline to share exactly with you today. But I really encourage folks to go to cmegroup.com for all their information on crypto and for all of our other products. There's also tremendous educational resources available at cmegroup.com. If you're looking specifically for some of the cryptocurrency elements, you can go to cmegroup.com/Bitcoin or /Ether. You could also follow CME Group on Twitter at CME Group. You could also follow myself at Tim McCourt CME on Twitter. Always a great place for updates or share product ideas. I'm always on the lookout for what we should be focusing on next. So myself and the team and the entirety of the exchange is all ears when it comes to where we should be focusing next. So please head to our website, check out the resources, and let us know where we should be focusing next. And really thanks, Andy, for the time today. I've really enjoyed our conversation.
Awesome. So have I. All the best, Tim, and bye for now. Thanks very much. I really hope you did enjoy today's episode, and if you did, please do subscribe to the Crypto Conversation in whatever podcast app you are using. But for now, that is us. We are out of here. See you next time. See you real soon. This was the Crypto Conversation for Brave, a new coin.